Is the trade war officially done? As the bottom come in, now we're expecting a huge mega rebound because we got a huge mega rebound the last 2 hours of the trading. Why? Because of a specific tweet from the president himself to pause for 90 days. This is a big discussion. Let's talk about this. For the reality, is this really over? Stick with me on Buy, Trigger and Family Investment to share more. Okay folks, thank you for staying put, and let's get into the nitty gritty, and let's be honest, is it really over? But before we discuss whether it's over, we need to say what's the real impact. I mean, the 10% on NASDAQ, 7% S&P, I mean, not for today, but for the last 2 hours of the trading, just because of a single tweet that came on Truth Social. Regardless of what happens there, we know it's about the trade war between US and China, but it's that 10% pause immediately for the next 90 days. Okay, so the real deal now, we realize it's not US against the world, it's US against China. That's a speculation. Now with the Chinese slapping 125% and China slapping 85%, it was like a ping pong match for the last 36 hours. So before we go into the trade war, we speak about the countries who's been involved. Okay, there's all negotiation, 40% slap on Vietnam, and then 35% on Thailand, and 35% on Taiwan, and the list goes on. Everybody came and negotiated. Everybody who never retaliated will get this 10% relief for the next 90 days. So push all the way down to 10%. All that bluff that was called is not eligible no more. It was like a test. And do not retaliate, you will be rewarded. That's what's been said in the statement, and there are loads of video going on there, and you can see some of the Nvidias at 18%, Robinhood 23%, AMD 20%. It is just roaring. It's crazy. I mean, the last 2 weeks seeing the market go down has been painful, but now you watch this roaring quite high. It's this a fairy tale that's been made out. So 104% been slapped. So there was a whole ping pong, and then Chinese retaliate with 84%. And then you can see the Chinese dumping the Treasury 10-year and pumping up the yield higher. And then you can see tweets about China warning students not to go to the States and the welfare and safety of the Chinese national people in America. It went on. I mean, the market went a bit berserk. I mean, there's an argument as well saying that was so China retaliated, they fell into the trap. But then was this a retaliation that's needed when, the president himself started holding? So there's a lot of debate going on the internet just now. So as for one, everybody's relief, everybody's calling the man the hero, and also there's another group that's saying, oh, it was a bluff. I mean, the Chinese wouldn't do that unless it's done it to us. Or the other argument is, look at what the Chinese has done. They're the ones that's devaluing. They're the one that's getting everybody in trouble with devaluing the yuan and trying to topple the entire market. So there's a lot of ping pong. There's loads of debate going on. So let the economists explain, and we can digest it later. But for now, this is indeed a relief for many of us long-term investors. Okay, it's a relief. So take a breather, take a break for the next few days. It's going to be Friday really soon as well. So take a relief and really look at your portfolio and look back, reflect. Okay, reflect. Don't go and tell yourself, okay? Let me repeat again. Do not go and say, I should have bought more. I should have slapped my mortgage on it. Calm down, okay? 5 days ago, loads of people were telling me that I really regretted not taking the top. And now you're regretting not buying the bottom. Need to calm down, need to reflect where you have gone wrong. That's what we really want to discuss today. Okay? And the other thing I want to say is, I like the Prof Mo. I call him Prof Mo. I even encourage my kids to get to the university and get taught by Prof Mo if you can. But all I want to say is I've reiterated that economists can only explain to you what's happened. They're like history teacher with great book deals, but they cannot forecast what's going forward. So when you guys go on Twitter, when you read about the Prof or any other economist that you favor, that you like, just remember they explain what's happened, the lagging indicator. They cannot explain forward. So as an investor, you have to be careful reading what they say, because whatever you've read is already the past. Okay, that's what I want to stipulate. So this is where we were. We are on a journey to the great big land of opportunity. and something happened, the boat sunk, and all we had to do is survive. Okay, the crash happened. Okay, that crash that happened. Have we survived or not survived? It is still not over, guys. Okay, I just repeat that it is still not over. But before we go deeper, please do like and subscribe. Why? I work very hard, and for some reason YouTube keeps blocking me trying to share my videos. So I'll appreciate if you like at every forum, share it, do whatever you can just to help me grow, because people who view my channel, I appreciate that this will be very, very useful for them. So if you help me extend it, it'll be really, really super, super great. So now back to this picture. Now imagine the Titanic, the hope, that light that's coming through. That's what we're feeling today. Okay, but remember, we're still out in the cold. Okay, we're still hopeful. It's a real boat. It looks like it's a real genuine boat. I can feel it. I'm still alive. I'm blowing my whistle like what Ross Dawson is doing there. So the thing that really worried me for the last 4 weeks wasn't my portfolio. I was in complete control of all the portfolio I managed. I understood the risk. There's no point in time that I was thinking, oh, should I sold the high? I was managing it really well. What I was facing challenge was my content creating. Because people who follows me, my club members, that was my difficult time, because I had to manage the stress level in the room. I had to think twice on what I would say, and things I was stressed about if I said something that could steer someone doing something else. So that was the most difficult part, to be a content creator, to make sure that you supply facts and be less biased, but at times you need to be biased to steer the reality of things. So that was my challenge, and I just want to thank everybody who's walked this journey with me. It's not easy on the content creating front up, because you're trying to see the future, but I appreciate that everybody has joined us on this journey. Now, short term, is a crash, not crash. Long term, it's still debatable. It is not over, guys. Okay, it is not over. If it was over, we wouldn't be here. Okay, I'll be on holiday by now. So, looking at the VIX, it's come down. Okay, it looks like it's come down. It looks like the eruption is over. We're making our way down. But on the technical front end, it looks like it's relieving. But hey, we are still at 33. It's still a while before we get back down to 20. And we need to think. Eventually, if we do get down to 20, is it going to bounce up? Because 90 days pause can get unpaused, and the media, we've seen the media can manipulate things really, really easily. One fake tweet, boom, it goes up, goes down. This is a really hyper volatility moment. The VIX is still our best friend. And next, again, it's not over. Why? Because the Moody's 20-year corporate bond yield is rising up to 5.55%. And today I told my club members, you have to be careful of this. Why? When this Moody's bond yield goes up high and high, it devalues the stock valuation. Okay, as you can see, there's loads of downgrade, price target downgrade across the board on different companies, and it's due to the bond yield. It's due to the future valuation. It's how much your company is worth. It could come down, but look, it's rolling really high. It could come down, but we're still above the threshold of the 5.5. As a matter of fact, I had to tweak my buy trigger. I had to tweak my valuation. So this was the old one, and I did a bit of tweaking when I came back from work. And you can see there's substantial change on the value trigger. So you can see there's less blue. What does it mean, Alex, less blue? I have increased the risk. I've increased the risk because valuation will change. Remember, tariff or no tariff, there's still tariff compared to last year. So things will still get expensive. Inflation is still in consideration. Recession or no recession, we still need to speak about it. But the value of stocks going forward and the forecast by companies, or not the predictive, but the forecast that the companies will offer, like due to the tariff, will reduce the EPS, earnings per share, and that affects a lot of things. So for example here, Nvidia, last week before I upgraded my conservativeness, it was at 149. I mean, it dropped from 160 to 149, and I further tightened the handle, and now it's 139. Amazon 310, I've tightened it 280. So all the value trigger, which is automatic, I've tightened the parameters to make it more conservative. I mean, it doesn't really affect the buy trigger. The value trigger is in place to defend it. But where I am really coming from is we shouldn't take this lightly, because with the bond yield, the value of the companies going forward is reduced because tariff of 10% is still in place. Things will get more expensive. If if US doesn't deal with China, where they're going to produce the iPhones, where they're going to produce the cars, things will get expensive, materials will get expensive, oil is being dumped in the market. So it's not over. One tweet doesn't resolve the entire thing. Yes, it's self-inflicted, but one tweet doesn't resolve, and there's still a lot of negotiation going on for the next 90 days. And will the 90 days resolve every single countries in the world? And remember Brexit, it took 2 years for UK to negotiate with the whole entire Europe. It took like 2 years before we got a deal of some sort because people were exhausted. So this could go on and on. So I am not asking people to just take this as a celebration that this is the bottom. It's not the bottom yet. It's still ongoing. Sideways market is still happening. We have to be careful. We have to be vigilant. But I am glad that I can say that, folks, if you followed me, de-risking is still key. You need to diversify to areas where not just focus on semiconductor and tech. I recently went into like more defense, more defense stock. I'm looking at cybersecurity. Why? Because if the tariff kicks in, cybersecurity will still be there. Defense, why? Because the Germans, UK are not buying any more of the US aircraft and defense materials. So now, who's going to supply the rest of the world? Who's going to sell stuff to Taiwan? Who's going to sell stuff to Israel? Guess what? The American will have to level up. The Americans will have to step up to improve productivity to sell to everybody else. So that's an opportunity. That's why I'm moving in that way. Okay, so it is not over. I mean, one good news for the buy trigger. I mean, I've updated it already. I'm looking at the buy trigger individually. I'm looking at a forecast as well, but the value trigger is in place. I've tightened the screw. So for the club members, you get the whole database for as part of what you get. Okay. But for you guys visiting, not part of the club members, you still can go to my website, go to alexgo.me. I've increased to 20 of the top stocks that's in the database for free for you guys to have a look. The buy trigger, feel free to go. So alexgo.me and go to my database, or go to buytrigger.io. Is it still there? Buytrigger.io, yes. Or just click the link below, you still get it for free. Or if you guys join the free buy trigger club member starter plan, the link is there for you guys to use as well. If if this is not a great time to afford a membership, so I'm trying my best to give as much as free as possible, and also my free time to everybody. Okay, so going forward, what's next? We just have to play vigilant. And I just need everybody to remember, we just got on the boat. We saw distant light. We might be safe, might not be safe. Could you survive the cold? We're still out there, okay? We're still out there. So just remember this picture of hope, and remember this picture of the suffering that we went through, and remember your portfolio diversification. Why did your portfolio go down so badly? Is it the high risk stocks that you held? Or is it the diversification you never went through, hold too much semi-stocks, too much tech stocks? So it's something you need to think about going forward. It is not over, but you and me, we are all portfolio managers of our family's account, and we really need to defend it at all costs. I mean, you can say that you sell the top, but we're on the journey there, we're on the boat. You cannot really sell everything out, because if you sold everything out like last week, you would have missed this bounce, okay? You have made even more loss because you bought the bounce at 10% NASDAQ more expensive, and you've complete made loss. So is this a glimmer of hope? It's more positive than last week, but it's still not clear where we go. I hope you enjoy this, and I really hope, because I do enjoy creating the content day in, day out for everybody. So take care, and if you can, again, please share, like, and subscribe to help me with the algo. Share with friends, go on WhatsApp, share as much as possible, because I struggle with YouTube. I struggle with the algo. They keep blocking me because certain words that I mention that they think that it's bad. Okay, it's not helping me trying to share content. That's why I have to create this club member, so that I can openly speak about things that will help other people. So thank you for your support. I'm glad, and I hope that this journey has been worthwhile with me together. Take care, guys. Bye.